Welcome to Money in Motion by Trade the Chain. If you want more from CJ and Monte, subscribe to Trade the Chain and get access to the TTC community Discord, weekly futures reports, AI-driven cryptocurrency sentiment indicators, and other exclusive content. For a 14-day free trial, visit tradethechain.com or visit the link in the video description.
Hello, folks, and welcome back to another edition of Money in Motion. Interesting day today. Some things are up, other things not so much, but it's always like that, isn't it? Anyways, we'll get to a bunch of exciting stuff. Monty, good morning. How you doing?
Good morning. Good morning, CJ. I'm doing well, and like you said, yeah, a bit of a mixed bag this morning. Good morning, Phoenix. Good morning, Keith. Good morning, UIC now. Hope you guys are all doing well and everyone else is watching. But Bitcoin, actually looks pretty decent today, CJ. All things considered, when you take into account, the rest of the market. We also have the DXY pulling back. I do want to talk about that briefly. And then rounded up with just some of the trades that we've been talking about this week and providing an update on that. But if there's anything you'd like to start off with, please feel free to do so, my friend.
Yeah, I would love to. I want to talk about the title of this show today. Let me get some charts up first.
The bond market.
Yeah, bond market. So I don't normally do this, but there are times when the normal rules don't apply. Okay, so this is a ticker symbol ZB. It's T-bond futures. Now, looking at things like the Dow, gold, and Swiss franc, these are all safe haven trades that have been, well, except for the Dow, but these are safe haven trades that are doing pretty well, but they're kind of in the basket of risk on as well. So if I'm worried about the Dow going down or stopping me out, one way to kind of hedge that I would look for is like the weakest asset. And that has also been not necessarily based on positioning, but we've talked about bonds being a crowded trade. And if these prices continue to go lower, like there's going to be a lot of longs that end up capitulating. And that's kind of irrelevant due to the fact that we've already gone down for months is kind of irrelevant at this point for the next like 2 weeks. If I'm just looking for a hedge. So that's something that is kind of interesting that I think is a good idea, because if you assume risk assets are going to go down or safe haven assets are going to go down, I think the best hedge or the weakest asset in that move would be long duration, or specifically these T-bond futures. You look at things like EDV are at their all-time lows, maybe not all time, but at least like maybe 10-year lows at least. So yeah, and you can see it on Twitter. You can see it on various people who have built their funds around like long duration are starting to lash out and get very violent, which I think that means capitulation is probably near or soon. I do see your question, Ryan, about soybean oil. I think that we should talk about the soybean market and that family in general. But first, Monty, I'll pass things back to you.
Yeah, great analysis there, CJ. Thank you for that. But yeah, I guess let's just dive right into Ryan's question, because that is a trade that we've been talking about for the last couple of weeks. Like CJ said, the soybean oil trade and just the soybeans in general. So if you're in our Discord, you know that I don't know when I drew this, but like this is what I was kind of expecting to see, and it looks like we got pretty much exactly that. So I circled this here as a trigger for entry. I think that now that we've bounced from the lows, I talked about taking it off here. I talked about how you don't need to wait to like hit your targets robotically. And if you see the trend reversing, take profit. That was an episode of Money in Motion last week. You can go back and check that out. But initially my target was 51.45. but we started to see signs of profit taking. And I said, I'm like, sometimes when you see signs of a imminent reversal, it's best to just take your money off the table. Even though, we like to remain disciplined. I more so remain disciplined in my stop losses, not so much in my take profit levels. My take profit levels, like I'm willing to take profit before it hits a target. I'm not just going to sit there and watch it reverse beforehand. So ZL, I think, actually looks pretty favorable here. We're headed back down towards the lows after we've seen some profit taking and some plausible short covering here. So now we're headed back down. I like it to at least, the local lows of around 52.33. So that's kind of my overall outlook on ZL. I think now that we're below the 200-day moving average, you can consider this downtrend, very much intact. And I would start targeting the $50 range. So for Ryan, that is what I am doing for ZL. I actually hadn't looked at this chart since we talked about it last week, but I think that looks pretty favorable from a risk reward perspective. Cut it if it breaks above 55 or 56 and basically ride it down to 51. I think that's a pretty good trade. So hope that helps, Ryan. And that's kind of where I'm looking at ZL. I think I may actually enter a small position here after the show. Any thoughts on ZL, CJ?
Yeah, I'll just show some positioning, I guess, and then we'll talk about the others. So first I want to talk about some of the others that have high correlations within this market that are actually, I talked about this briefly in the community yesterday, but this is one including soybean futures as well as soybean meal. Those are two that have really popped and trended higher ever since the WASD came out. That's the grain report, I believe, that basically created the bottom last Thursday. It's tough to get a news failure on that one. You did just have some defined risk and a lot of, you look back at these periods where there's a lot of crowded shorts and commercials are long, you get a nice pop to the upside. So this is admittedly one that I definitely missed, and that could certainly continue to trend higher and squeezed out shorts here once they're back to a neutral level. So I think that's interesting, and I'd actually be looking, I missed the trade, so I'm not gonna take these. But looking at soybean meal is another one where you had clear examples of the trend or COT telling you, hey, look for longs here. And then, once you get kind of the market reversal, now we're starting to see the liquidation of some of those shorts who are trend following. ZL's kind of different because there isn't as many shorts. So yeah, I mean, for me, I don't think there's any more edge in this trade that I would take personally. I'd rather just move on to other stuff. But I think if from a trend following perspective, if you were to use COT to do trend following, I think that this is a short trade that seems perfectly reasonable because it's a non-crowded market. In other words, there's not a large amount of shorts here. There's actually a lot of longs that we're buying in throughout these levels, which may have to capitulate if we start heading even lower here. But you also have, the other two in the family that are kind of looking at potentially rebounding. So it's just, unless you're just doing some pure trend following, it's difficult.
Yeah, it is. It's difficult to trade that family of assets right now. I think really, without that positioning data behind you, it's just tough to take the trade or get any sense of directionality. So I don't think you're alone in that. I think a lot of people are feeling the same way.
That's a good question. I would like to know myself. Let's go.
No, he's not okay. No, I'm kidding. Let's just let him cook. Let him cook, people. But let's move over to Bitcoin because honestly, CJ, you might not be okay, but Bitcoin, I think, is looking pretty okay. To be honest, I think that from a risk reward perspective, this is looking very nice. You know, what does Nick always say? You know, comes up here and I expect it to come up here and grab this liquidity up here. You know, I think that that is definitely a possible scenario, and you have a good defined risk with the 200-day moving average. A break below this, you cut it. But to the upside, you have a clearly defined target where we wicked up to on the back of that ETF news. So for me, this is a really simple trade, right? We had yesterday's reversal candle, very nice looking doji, kind of confirming this 200-day moving average as support. So again, you know, let's get out the risk reward long position forecast. I would put my stop right below break even, or right below, excuse me, the 200-day moving average, and target just below 30K. And this is what you're looking at. So risk reward of about 2.33. No, that's not crazy for Bitcoin, but go ahead and sprinkle a little leverage on that. And you're looking at, you know, a risk reward of, you know, possibly 4 if you want to use like 2 times leverage. I wouldn't use anything more than 3x because that would put your liquidation price kind of close to your break even. If you use 5x leverage, your liquidation price would most likely be about 27.3. So that's about as aggressive as I'd get in terms of using leverage with Bitcoin longs right now. For me, I usually stick between 1% and 2%, so about 1.8% on this one, because I have a high degree of confidence that it's going to move to the upside here. You know, I'm willing to use a little bit more leverage, but I think that this is a very favorable setup. You got nice defined risk, a nice defined target, and overall, I think we've kind of flipped this 200-day moving average from support or from resistance to support. So with that being the case, I am, you know, think I'm going to, after this episode, go ahead and, or maybe I'll do it right now, just open up a Bitcoin long with a little bit of leverage, because I think that we have a chance of running up to the top of that wick. But I'd love to get your thoughts on that as well, my friend.
Yeah, very simple. We didn't fully retrace the fake news pump, and we're still up at 28K, so we should go higher. That's what I think.
Yeah, exactly. That's literally the
so
that's the thesis. It's pretty simple. Keep it simple, stupid.
The more you think, the more money you will lose. It's inevitable.
Yeah, but yeah,
the more you think, it's not an intellectual quality that makes you successful in investing and trading. It is a temperamental quality.
100%. And like over trading is such a real thing. It is so real. If like stick to your conviction.
Yeah, it's called gambler's tilt. It's what I look like when I'm playing roulette. I've only played it's a story. I've only played one roulette game with Monte in Vegas, and it was like I think 6 or 5 consecutive blacks came up, and after like the 3rd or 4th, I was doing red every single time, right? And the guy's like, he looked at me, he's like, I've never seen that before.
Yeah, the dealer who this was like an older guy who's probably been working in Vegas for like 50 years. He's like, wow, I've actually never seen that before. CJ's first time sitting down to gamble. He gets like literally so unlucky, but hey,
I'm used to it.
Yeah, paved the way for you to become the trader that you are today, I think. So, but yeah, no, I like the Bitcoin, like the very, very simple setup being, you know, retracement of that wick going up, snatching that liquidity at 30K and then getting rejected, I think is a very real possibility for Bitcoin. And I did just open a position. So there you have it.
What if there's anything else interesting?
Well, I did want to actually toss this to you because, you know, the NASDAQ and S&P look like decent today. They're flat. Seems like there's a bit of an indecision in the markets, but we're seeing directionality out of the crypto-related equities. particularly Coinbase looking strong, Mara looking strong today. I know you already have, you've talked about, you're fully exposed to Coinbase. But what are your thoughts on this chart? I think, it's looking increasingly bullish here as it continues to show resilience against the S&P and the NASDAQ. But I'd love to get just your thoughts in general on this chart.
I mean, dude, look, it's funny to me that people get like, they study for years and get a degree in like looking at a chart when you could just look at this chart right now and be like, wow, that looks like awful. Like both sides are getting wrecked. There's no trade necessarily to take in the intermediate term. But if you're thinking about the secular thesis, or you're thinking about the binary adoption of Bitcoin, this whole ETF, it's a risk to reward thing. It has nothing to do with the chart. I mean, sure, we've come back to a level which we were at prior to the ETF news. But like, yeah, I don't really, that's just not going to help me here. The only thing that's going to help me is the ETF getting approved, or, Bitcoin going into a secular trend. And if it doesn't, if we go below 70, or if we don't start going up by like February, then yeah, like I'm clearly incorrect at that point. So
yeah. I still think that's like a good secular bet though. Like, I mean, we're talking about gambling and we're using the word bet quite a bit.
They're all bets.
Yeah, I mean,
we're going to be honest about it.
Sure, every trade's a bet.
How'd the Rangers do last night, by the way? Did they end up winning that one?
No, they didn't.
Sorry to bring it up.
Thanks for reminding me. Yeah, thanks for reminding me. I had Rangers -1.5 in the over. I just hate the Astros. I've never bet on the Astros. Sorry to any Astros fans out there. Although
Don't
I do
apologize. They're just a bunch of cheaters.
Yeah, cheating pieces. Anyways, it was a good game though, and I have missed playoff baseball. Not gonna lie. But getting back to the markets, like the secular bet on Coinbase is, like you said, that spot ETF approval, and to me, like that is something that's not even almost a bet. It's like an imminent, or not imminent, but it's something that is going to occur.
An inevitability.
Yeah, it's an inevitability. When it's going to occur, fuck if I know. Like, I'd be lying to you if I said I had any idea with any degree of certainty. I even have a friend that works at BlackRock, and I messaged him. I'm like, yo, when's this ETF getting approved? What's going on? And he didn't answer me. He's like my best friend too. It's like usually he would usually answer me, but he knows better than to provide me any inside info. So I was just messing around with him. If you're watching this, Gary Gensler, but that does
now
feel...
you know where Monty's edge comes from.
No, see, that's the thing, is like I wouldn't be taking on this 1.8x levered position today if I had any sort of edge. This is more so me just wanting exposure and getting exposure. But I think that ETF approval feels like more of an inevitability than anything. So it's kind of like taking the gamble out of it. And in the medium to interim term, Coinbase could definitely chop around and definitely go lower. It could miss earnings and fall hard. But I think in the long term, like 1 to 2 years, and we talked about this in the Discord a little bit yesterday, in terms of Bitcoin as well. But I think in the longer term, like 1 to 2 years, you're just going to see continued growth and continued like relevance in the crypto market. So I think from the long-term perspective, Coinbase is a great bet. And that's why I really like that trade. I see Keith asking about the precious metals. CJ, I know you've been keeping your eye very closely on gold and silver, as your friends have started to even ask you about gold and silver, which is a bit of a red flag in some cases. But what are your thoughts on the precious metals and how they've been performing? I know you also have been trading or taking a look at platinum as well.
Yeah, there's really no follow through in platinum, unfortunately, so I had to cut that one a little bit. Yeah, I mean, I actually have the gold chart right here watching it on the 15-minute. You should also never watch the 15-minute chart. It replicates the feeling that your brain has while it's on cocaine, the combination of serotonin, dopamine, and cortisol. It's very, very bad. So that's also a part of why you shouldn't overtrade, because it's the same thing as cocaine, essentially. Like if you look at the neurology, it literally is the same thing.
Wow.
So
yeah. That's a,
and we go back to the question: is CJ okay? All right. Moving forward to the metals, it's tough, right? It's tough with like them starting to get popular. I would wanted to see gold up today more. It's having a little bit of a correlation failure. When you look at something like DXY being down 20 basis points, gold should probably be up on that news. You also look at things like the Swiss franc up 20 basis points. Gold probably should be up. You know, the day is still young. We've rallied back from last night, still quite a bit. But nothing really in the immediate to do yet. I talked about like the bond hedge, if that comes off a little bit, but you know, I wouldn't really chase metals up here, but you know, if I got in like earlier, if I was in from lower, like just kind of ride the trend until you get, you know, a bearish close, but we haven't really had one yet. I will say Swiss franc and gold are starting to become, I see them starting to be talked about on Twitter more, which doesn't mean they can't run for another week or so, but anytime something starts getting a lot of attention, you saw it with uranium, you know, I hadn't thought about uranium in months, and then I saw it on Twitter. I checked the chart. It was parabolic, and then it topped like a week or two later. So not saying that has to happen with gold, but we just haven't seen anything in the interim. We could talk about like, you know, QE theories and war theories of what the Fed will do, but I don't even really care to get into that pontification today.
Yeah, there's no point in the short term. It's ultimately irrelevant. You know, you mentioned the Swiss franc, and this is a position that I'm in, but I do want to announce I'm going to be taking some profit here today on the back of that analysis done by CJ. If you're not a member of our Discord, you know, he posted some really good tweets in here. And I think, you know, Brent Donnelly had a really nice take. I agree with his. I follow him on Twitter. I think he's a good follow. So shout out to him. But he says there's a shortage of safe havens. Bonds don't work in this regime, obviously, which CJ touched on. And I mean, it's the title of this show. The only two decent safe havens appear to be gold and Swiss franc. Gold's role as safe haven is unreliable. Sometimes it's a safe haven, sometimes it's a liquidity proxy. And it very much feels that way this week, right? Like it's hard to tell if it's a safe haven or if it's acting as a liquidity proxy. But the Swiss inflation is falling fast enough that the Swiss National Bank is not going to love this Euro Swiss franc move. So both moves are exaggerated by the shortage of good safe havens and are subject to rapid reversal unless there is dramatic escalation in the Middle East, in which case, obviously, all bets are off and CHF or gold will go parabolic. In other words, they're okay hedges for Iran getting involved, but they will unwind just as fast if things don't get worse around Gaza. So just to like, you know, unwind that take a little bit, I do agree. I think it's clear that gold and Swiss franc have emerged as the safe haven assets. I do, however, somewhat disagree with the idea that the Swiss franc is due for rapid regression just because it's performed well. I think, if anything, it proved its strength after this day of an immensely negative price action. Of course, you know, this was, you know, at the 200-day moving average, technically speaking, and also, you know, before any of the, or it wasn't before, but, you know, this is a big move in Swiss franc and shook out a lot of the longs, but they got right back in and continued to trend higher. And when we're talking about currency pairs, getting above the 200-day moving average tends to be pretty significant. So I don't think that this run is over for the Swiss franc. I am taking a bit of profit on the back of it becoming a bit more crowded and a bit more prevalent in like the zeitgeist of Twitter as a safe haven asset. Like Ben said, there's a lack of safe haven assets, which has massively benefited the Swiss franc. But I think we could plausibly see continuation up into the top of this range here at about 1.17, at which, that would be a tremendous move, and I would be fully out of my position at that point. That being said, I do think that today is a decent day to take profits on the back of this becoming a bit of a crowded trade. So I still want long exposure, but I am kind of unwinding just a little bit because, like you pointed out, it is becoming a bit of a crowded safe haven play. And if tensions in the Middle East do die down, it could plausibly fall pretty hard. But I disagree with the premise that it gives back everything it's done since the start of October. I think that we're seeing the start of a secular trend that has more to do, that is a bigger picture than just what's going on in the Middle East. But that was a long rant. Apologies.
No, I appreciate it. Yeah, I'm just going to wait for the COT report to come back tomorrow and see how many people have covered.
Yeah, that's going to be really important and will honestly dictate how I position myself next week as well. But like Phoenix says, tensions don't seem to be dying down anytime soon.
The positioning should be interesting this week. I mean, you have to assume there's been a lot of shorts squeezed out of gold and Swiss franc, but I really want to see what's going on in things like Dow and Russell, and like if there's any edge to glean from like equities, because it's just been these past 3 months in equities have just been very difficult. It seems like to get any type of like directionality, like really going ever since like June, we really have gone nowhere in equities. Yeah. So we'll see. We'll see.
Yep. Yeah. Don't forget to head over to tradethechain.com and try out a 14-day free trial. That gets you access to CJ's COT data report that comes out on Sunday. Always a great read and lots of really good information in there. A lot of my trades I take on the back of that information because I think that, when we're in a time like this, I think the positioning of traders is arguably the most important and most reliable metric to go by. So that COT report I find invaluable. So if you haven't checked that out yet, that comes out on every Sunday. Whenever
I feel like it.
Yeah, whenever he feels like it. But it's always worth the read. So you get access to that if you sign up for Trade the Chain and take advantage of that 14-day free trial. Definitely recommend you check that out. But if not, that's cool too. We'll be doing an episode of Trading Rebellion with Nick today at around 1 o'clock Central Time, right? And yeah, that's about it. Anything you'd like to add, CJ?
No, that should do it. Thanks, guys. We'll see you tomorrow.
Thank you for watching Money in Motion. If you want more from Monte and CJ, subscribe to Trade the Chain and get access to the TTC community Discord, weekly futures reports, AI-driven cryptocurrency sentiment indicators, and other exclusive content. For a 14-day free trial, visit tradethechain.com or visit the link in the video description. Thank you, everyone.